I think one of the phrases that we like to chat about when we describe our philosophy at Wedgwood Partners is this idea that focused investing has structural advantages over other strategies. And specifically what I mean by that is, at Wedgwood, we typically own about 20 stocks. That's how focused we get. By being focused at the company level, we get to be very picky. In other words, we're putting our 20 best ideas in a portfolio, and that's where we stop. So we can be, given that we have very low turnover at Wedgwood, we hope to own these terrific growth companies for many years. And so right out of the box, our focus, to coin a phrase, no pun intended, is on those businesses that we think are best in class, that are uniquely competitively advantaged, that we believe at a minimum can double over the next 3 to 5 years. So it's not growth for growth's sake, hyper growth, imprudent growth, risky balance sheet leverage growth. We're looking for these terrific businesses, market share dominating leaders that don't have to use financial leverage. And once we identify that small subset, now we have to wait patiently for the value side of the equation. And it's just as important, critically so. And so we know if we're buying companies at fair value, and if they compound at 15% over the next 5 years, that underlying growth is going to drive the out years of the stock appreciation. However, we want to buy them at a discount to intrinsic value. And we know from experience, and it makes intuitive sense, we believe, that it's the value side of the equation that's going to be the biggest driver of your potential return set of that company in your portfolio over the next week, month, quarter, year, even 2 years. So, if we're right on these business models, they shouldn't be changing that much. But as we know, with Mr. Market, valuation changes constantly, and it can get extreme. So again, just a synthesis, if you will, of this idea of focused investing, we're very picky on the type of companies we want to own, and we're very picky on the valuation in which we invest in them or trim them back or sell them.